Hi, and welcome to this monthly update on markets and factors. So we are changing the format a little bit from a weekly update to a monthly update. As many of you may also have received our factor investor letter for the month of October. So that is going to be a monthly occurrence from now. And what we're going to do with these videos every month is run through the main findings and the main points of that factor investor report and update you on our factor alpha report. We'll continue with our Thursday series as we are. So with that, let's just dive in. So this is what we're going to cover. We're going to cover monthly returns, year-to-date returns, 5-year risk reward, excess return correlation. That is the most important part because it's the most actionable part, which will help in understanding how to pick factors or how to combine different factors, and the factor all weather. So this is how the returns look for the month of October. So value was the biggest performer, followed by high beta, which is not very surprising. And you'll see that why that is the case when we come to the correlation chart. The broader market did quite well at about 5%. Dividend did quite well at 5%. Momentum caught up, and the worst performing factor for the month was quality, which obviously gives you a flavor of that the risk on is returning to market. In terms of year to date, it's growth which is outperforming. Again, this growth index has to be taken with a pinch of salt because it covers only 15 stocks from from the large cap universe. So if you look at the other ones, those are more diversified. So value is about 8%. I think it's the outperformer for the year. High beta is about 5%. Equal weight, which has some bit of a value tilt, has done about 5%. Market has done 4%. Momentum is down about 4%, and quality is also down 4%. The worst hit being the small cap or the size factor, which is down 14% for the year. This is the URL factorinvestor.substack.com. You can go there and subscribe, and you will receive this in your inbox every month. This is the chart I was referring to in terms of excess return correlation. This is very important to see because a number of times the question pops up: what are the how do we pick factors, or how do we know how to combine different factors? Should we pick a multi-factor fund, or should we take factors separately? Now that's a different topic which we'll cover at some point in time. But currently, let's just understand what this table means. So value, if you see, has a slightly negative correlation to momentum, fairly negative correlation to quality and low volatility, and a very, very high correlation with high beta and small cap. So you can see that if you are taking the value factor, it is going to be very volatile, and that bears out in the standard deviation numbers. Momentum, again, you can see, has a decent correlation with quality, has a fairly decent correlation with low vol. Again, this has a little bit of this has to do with the way we calculate momentum in India. Usually, it's taking the past returns and divided by the standard deviation. That sort of is a momentum, smoothing momentum kind of factor. Quality, you can see, has a fairly high correlation with dividend and low volatility. And small caps, you can again see, have very high correlation with beta, so high beta. So if your value and momentum typically are have shown that they are fairly well diversified and work well in different conditions. So when value is usually working, as you are seeing this year, as I showed you in the chart, value is up about 8%, whereas momentum is down about 4%. So if you had them both in your portfolio, you would have got a decent return on that. Let's say if you had allocated 50-50, So 8 plus 4, 12 divided by 2, 6%, and you would have done better than the market, beating it by about 3%. So, yeah, so thinking about factors in terms of correlations, and that's how you need to think about how to diversify among factors. This is also the risk reward. You can see on the x-axis we have the standard deviation or risk or volatility. On the y-axis we have the 5-year return, CAGR. So you can see momentum has given the highest return. It's as volatile as the Nifty 50, and but has given higher returns over the last 5 years. Quality has given the same returns that as the Nifty 50, but has with lower volatility. So if you combine, quality momentum, you may get maybe somewhere like slightly higher performance than the Nifty, with maybe lower standard deviation or lower volatility. Even though, and now coming to the lower part of the chart, you can see value, small cap, and high beta all very, very volatile. High beta, in fact, has not had a very good 5-year performance. This year is quite good. Value also has not had a pretty good 5-year performance. The 1-year performance or 1 to 2-year performance of value is quite good. However, these two, value and momentum, or value and quality, or value and low vol, these could be integrated in a portfolio separately, because they work at different points in time. So that helps you diversify. Coming to our factor all-weather alpha allocation, last month we had gone about 33% in gold, 33% risk off. This month now we are back 100% in the market, so a little bit of we saw there, but in the value factor. But momentum and quality have remained strong. So this month the allocation goes back to value. So for the month of November, the model is signaling a completely risk-on kind of environment. So with that, we've come to the end of today's market update, and we'll be doing this on a monthly basis, like I mentioned. And I look forward. We've got tremendous response for our factor investor report. We have over 1,200, 1,300 subscribers for that now. So if you want to get it in your inbox, just go to factorinvestor.substack.com and register or just subscribe to our newsletter. The standard disclaimer that nothing in the video is investment advice. It's purely for educational purposes only, and please consult your investment advisor before investing. And you can follow me on Twitter at Anish Daily, at QEDCap, and visit us at QEDCap.com. Thank you, and have a good week, and see you again on Thursday when we come back with our next video where we continue our quant investing series.